What if I told you that one investment could potentially make you a millionaire faster than anything else out there? Are we talking about the steady, reliable climb of the stock market? Or the explosive, heart-pounding, sometimes terrifying ride of cryptocurrency? Well, stick around because today we're diving deep, crypto versus stocks. Which one of these holds the key to unlocking real serious wealth? All right, let's set the stage for this financial showdown. In one hand, we have stocks, owning a piece of real companies, the foundation of investing for generations. Think Apple, Coca-Cola, and Amazon, the companies you use every day. In the other hand, we have the disruptive challenger called cryptocurrency. It's digital money, powered by mind-bending tech called blockchain, promising a decentralized future, free from traditional banks. Think Bitcoin or Ethereum, these are the talk of the internet. We hear the stories constantly, right? The Bitcoin pizza guy, the Dogecoin millionaires, versus Warren Buffett's long-term stock market wisdom. It's hype versus history. It's risk versus reward. Which path is smarter? Which is faster? We're going to break down the pros, the cons, the cold hard data, and by the end of this video, you'll have a much clearer picture. Stick around because you won't want to miss the final verdict. So, what are stocks exactly? Well, let's start with an explanation. When you buy a stock, you're buying a tiny piece of ownership in a publicly traded company. It's like owning a single brick in a giant skyscraper. So, how do you make money? You make money in two main ways. First is capital appreciation. If the company does well, grows its profits, innovates, expands, more people want to buy its stock, driving the price up. Then you sell your shares for more money than you paid initially. Sounds simple, right? The second way to make money is by receiving dividends. Some companies share a portion of their profits directly with their shareholders, like you. It's like getting a little thank you check just for being an owner. Now let's talk a little bit about history. The stock market has been around for centuries. Look at the S&P 500, an index tracking 500 of the largest U.S. companies. Over the long haul, despite crashes and corrections, it has historically delivered average annual returns around 11%. Think about companies like Apple or Nvidia. Early investors who held on saw life-changing gains over years, even decades. So what's the big advantages here? Stability, relatively speaking, and regulation. Bodies like the SEC provide oversight and investor protection. And then there is the incredible power of compounding, where your returns start generating their own returns over time. It's the snowball effect for your money. Okay, now, let's move on. What is cryptocurrency? At its core, it's digital or virtual money secured by cryptography, operating on decentralized networks, often using blockchain technology to ensure transparency and security. Cryptocurrency is designed to be nearly impossible to counterfeit. Unlike physical money, which can be forged, crypto transactions are recorded on a decentralized ledger that is public, immutable, and cryptographically secured. What is decentralization? It's the process of distributing power, control, or decision-making away from a central authority, often aiming to enhance transparency, security, and autonomy within a system. You could call it power to the people, sort of. And there's blockchain, a transparent, unchangeable digital ledger that records transactions across many computers. Another thing is its limited supply. Some cryptos, like Bitcoin, have a maximum supply cap. Proponents say this makes them like digital gold, a hedge against inflation. Now then, the poster child for cryptocurrency is Bitcoin. Its journey from virtually worthless to tens of thousands of dollars per coin is legendary. Then there's Ethereum, which is more like a platform powering NFTs, DeFi, decentralized finance, and thousands of other crypto projects. So, what is the massive appeal of Ethereum? The potential for explosive, parabolic gains in short periods. You've seen it. We've all seen the headlines. But it's crucial to understand the flip side, which is extreme volatility. Prices can crash just as fast as they rise. Then there is innovation risk. It's cutting-edge tech, and not all projects succeed. And finally, there's the regulatory uncertainty. Governments worldwide are still figuring out how to handle crypto, creating unpredictable risks. All right, it's time to put them head-to-head on the crucial risk versus reward scale. First up, volatility. Stocks definitely have ups and downs, recessions, market corrections, and bad company news. But what about crypto volatility? It's like comparing a roller coaster to being strapped to a rocket launched during an earthquake. Daily swings of 10%, 20%, or even more aren't uncommon in crypto. It has a higher potential for reward, but also a much higher potential for rapid loss. How about security and oversight? Stocks trade on regulated exchanges with bodies like the SEC offering investor protection against fraud. Your brokerage account is generally insured. Now, what about crypto? The underlying blockchain tech is secure, but the exchanges where you buy and sell can be hacked. Private keys can be lost forever. Scams like rug pulls are rampant in newer, less established coins. Historical crashes. We all remember the 2008 global financial crisis. The stock market took a massive hit, painful for millions. But compare that to the crypto winter of 2022. Many coins lost 80 to 90% of their value from their peaks. One moment everything seemed promising. The next, it all unraveled. It was brutal. To use an analogy, let's imagine Sarah, who diligently invests $500 each month into a diversified stock index fund for 20 years. She weathers the storms, reinvests dividends, and builds substantial, secure wealth, maybe not overnight millions, but solid financial ground. Now imagine John, who put $5,000 into an emerging crypto in 2020. By 2021, it's worth a whopping $200,000. John is feeling really good, he feels like a genius. But by 2022, it crashes, and it's worth just $15,000. He endured extreme stress, and his outcome is far less certain. Both of these people invested in vastly different journeys and risk levels. Okay now, here comes the million-dollar question. Literally. Which one of these investments will actually make you richer? Well, looking purely at the historical averages, the stock market, specifically the S&P 500, has delivered around an 11% return per year over the very long term. Compounded over decades, that's a powerful wealth-building engine. The S&P 500 is relatively predictable based on company earnings and economic growth. Now, how about crypto? Let's see how it has performed. The historical data on crypto is much shorter and way more erratic. Yes, early Bitcoin investors saw gains that were mathematically insane, turning hundreds of dollars into millions. Some altcoins have delivered 100 times the returns in a year, or less. But, and it's a huge but, these astronomical gains are not typical. They come with immense risk, and for every success story, there are countless stories of people losing significant amounts of money. Crypto profitability is heavily skewed towards timing and luck, especially in the short term. It really comes down to your strategy and timeline. Long-term wealth building, for 10+ years, shows stocks have the proven track record for more reliable compounding growth. You'll get lower stress and higher predictability, relatively speaking. With crypto, you get high risk and potentially high reward speculation in the short to medium term. Crypto offers the chance for faster, larger gains, but with a very real possibility of significant and rapid losses. It's closer to gambling for many people, especially with newer coins. Okay, now it's time for us to take a quick poll. Where do you see the biggest gains coming from in the next 5 years? A. Stocks, B. Crypto, or C. A mix of both? Drop your vote in the comments below. All right, we've covered the tech, the history, the risks, and the potential rewards. So it's time for the final verdict, crypto versus stocks. Which one holds the golden ticket? For stocks, well, they are your reliable workhorse. They are regulated and tied to real business performance, which is great for long-term, compounded growth through patience and discipline. With stocks, the path is generally slower and less adrenaline-fueled. Crypto is the high-octane rocket ship. Crypto has the potential for life-changing gains unmatched by traditional assets. It's driven by cutting-edge tech and speculation. But the ride is wild. The risks are significant, including losing everything. And the future is still highly uncertain. So which one of these investment strategies will make you richer? Well, here is the boring but totally honest answer. It just depends. It depends entirely on your personal risk tolerance. How much volatility can you stomach without panic selling? And it depends mostly on your investment timeline. Are you investing for retirement in 30 years or hoping for a quick flip next year? It also depends on how much research you are willing to do. And crucially, never invest more than you can comfortably afford to lose, especially in the crypto space. Many savvy investors actually allocate a portion of their portfolio to both, maybe a solid base in stocks for stability and a smaller speculative position in crypto for potential upside. And this is where diversification is the real key. As an example, you may want a mix of 80% stocks or ETFs, 15% bonds, and 5% in crypto. But please remember, I am not a financial advisor, and this is not financial advice. Do your own research and consult a certified financial advisor before making any investment decisions. So what are your thoughts? Would you prefer stocks and ETFs over crypto, or would you choose a mix of both? If you found this breakdown valuable, give this video a huge thumbs up. It really helps the channel. Leave your comments below and be sure to subscribe so you never miss a video. Thanks for watching. I encourage you to stay curious, invest wisely, and keep building that infinite income. I'll look forward to seeing you in our next video.